Welcome to the Stage Analysis Members Midweek video. It's Wednesday the 1st of June, and tonight I'm going to do a special feature for the members on the Semiconductors group, which has been coming up in the watchlist scans for the last few weeks or so, quite a fair bit. So as you can see, we've had a bit of a change of behaviour over the last month in terms of relative strength, with the semiconductors outperforming in the short term, although still underperforming in general as we're in a stage 4 decline. But to begin tonight, for the normal programming, we're going to go through the major index charts, have a look at some of the short term market breadth charts in the first part of the video before I get into the semiconductors group and have a look at some of the individual charts in that. So right, let's begin with the S&P 500. So this is the intraday chart of the S&P 500, the 2-hour time frame. You can see we had a stage 2 breakout attempt on the intraday chart a couple of days ago, which pulled back today, just a little bit less than a percent at 0.81%. We've moved up into the peak liquidity area in the near term here, back into this prior resistance where we had that pop on the Fed. That was the Fed day back here, where we were initially attempting to form a base on the lower time frame. So there was an initial selling climax, an automatic rally attempt, and an attempt to form a base, which then failed, and we made the stage 4 continuation breakout. So we've since made a new lower base, so potentially selling climax, automatic rally, secondary test within here with an undercut at the bottom of the base here before moving up with a higher low, then following through out of the base structure and now forming on a secondary level above that initial base here. So potentially in early stage 2 on the 2-hour time frame here. However, not much going on in the way of volume in terms of the breakout at the moment, so not a lot of conviction so far with it. If we go back to the daily chart, you can see we've actually run into a major resistance area. So that whole base structure from the 2-hour time frame here, this area down here, just this little area in here. So we've just popped out of this and are just sitting on top of the initial base structure and back into prior resistance here after this just over 20% decline from the high back in the start of the year here, but topped out in the S&P 500 on the 4th of January, whereas likes of other indexes topped out much earlier than that. So the S&P was one of the last to start rolling over, and it's had one of the shallowest pullbacks. You can see the percentage of stocks above the 20-day moving average here has popped up. We had a little bit of a breadth thrust over the last few weeks, where it moved back up above the 70% level and has since pulled back a little bit today. And in the last couple of days, we're now back to 60% at the moment. So still on a near-term, short-term bullish signal at the moment, although coming back down from the upper zone below potentially negates that. But we'll see if it can hold up. If it starts to move back down through the 50% level and back towards the lower zone again, then that would turn it off again. But at the moment, short-term positive signal there, and it did manage to hold at the 21-day moving average today, as you can see here. So it had an attempt down to the 21-day moving average, the top of the recent base structure, but was rejected. Managed to hold up, so consolidating for the last 3 days at the moment, although we've seen some heavy moves in certain areas like the oil stocks, which actually I should have probably covered tonight, but I covered yesterday in the blog post. So the major oil groups had a buying climax type move yesterday. Lots of heavy moves into the end of the month with heavy volume selling as they reverse near the highs. So potentially a short-term swing high, but it needs much more confirmation yet. So today they attempted to pop up a little bit, but didn't make a huge amount of progress. So potentially still in play. So I'll probably cover that in the weekend video once we've got a little bit more data on that. So we move on to the Nasdaq Composite, similar kind of price action here, pull back into the 21-day moving average today off 0.72%. So still in a stage 4 decline on both the daily and the weekly charts here. And if we drop down to the intraday, we're just forming a stage 1 base at the moment on the intraday here, potentially breaking out into early stage 2, but a little bit up frosty at the moment, so hasn't managed to have a convincing breakout yet. It's still below resistance from prior peaks here. So, and you can see on the weekly chart clearly in stage 4. Russell 2000 again pulled back into the 21-day moving average today, and a little bit of a demand tail showing in there, as you can see, after pulling back into price support from the top of the range here, after obviously testing earlier in the week the resistance. So ran up into resistance on Monday and turned back immediately at that point and has pulled back in. So constructive at the moment, not massive volume, a little bit in terms of distributional and higher volume than the previous days when it was running up, but still pretty low volume overall in general. So looks fairly constructive. We'd be looking for this to continue to either tighten up in here, potentially start to get back above this 50-day moving average, start to turn up in this way like that, but potentially could, if it's negative, this is a secondary entry point after a stage 4 breakdown area. You get the pullback to resistance as a secondary entry point. So if that's the case and we start to fall back below, then potentially we could make a move off towards the lows with a break through this near-term channel area here. So keep an eye out for that kind of action as well, as at the moment we're just in a consolidation zone. VIX continues to come off here. So I talked about the divergence that it was having over the last month or so here. You can see it was actually we were moving in line early in May, but then this started to diverge, lower highs in the VIX while this was still making lower lows. So but then started to move back in line here with the reversal back up, and this continues to come off. So we're looking for a break below, back down below the 200-day moving average area here for potentially start to get back into a positive range down here. Moving on, market breadth. So we have a look at some of the short-term indicators here. We've got the Nasdaq percentage of stocks above the 20-day moving average is now up to 50.59% at the moment. A little bit of a pullback the last few days, but had a positive signal moving through this area here, coming out of the lower zone cut earlier in the week. So on a positive signal in the short term, Nasdaq 100 has moved up to the upper zone, but again broke some levels from the downside, so remains on a positive. NYSE coming back down from the upper zone at the moment, so short term positive at the moment, but as I said, when you come out of the upper zone and come down, it's a potential negative signal, but it needs further confirmation. So remains on a positive at the moment, but potentially could be turning negative here. Same with the small caps and the S&P 500. So at 60.2% at the moment. Look at the another short-term indicator here, which is the intraday bullish percent index chart. So this is showing a bit of positive divergence versus what's going on in the price action at the moment. As you can see, this has continued higher above a rising 30-bar moving average here in the NYSE and the Nasdaq through the last few days during the pullback. So this has managed to gain a few percent in both the Nasdaq Composite and the NYSE while the market has been pulling back. So constructive in the short term there, showing more double top breakouts than double bottom breakdowns. Then the new high, new lows. As you can see, the new lows in NYSE continues to come off. We were down to 26 today, so lowest figure it's been at in terms of new lows for a little while now, a few months here, and whereas the new highs are finally outpacing a little bit, but they're still very low. We need to start seeing these new highs get back above the 100 level and start to hold up in this range. But Nasdaq the new lows continue to outpace the new highs with 190 new lows and 30 new highs still. But as you can see, it's way below the level we were at in early May. So a little bit of a positive divergence, but it needs the new highs to start taking over again before we can get much more positive in that regard. So still a little bit short-term negative there, and as I said with this previously, we remain in a stage 4 decline on this one. It takes a little while to turn this around. You can see it's flattened out over the last few days or so, but we're looking for this and the 50-day moving average to start to turn back around, and that would give us a potential new long-term signal, which we got with this indicator, the cumulative US new highs minus new lows back in late May 2020 previously, and the breakdown in early December 2021. So need that one to start to turn around. The 5-day average continues to run up towards the zero line, so we're seeing a little bit of divergence going on here. If we take the 5-day average off this and let's just look at the normal figure, you can see it actually popped up to the zero line. It's at minus 159 at the moment. But again, we need to see this gather back above, like we saw over in this area here with a breadth thrust back above. So you want to be back up in the higher level above the 250 into the 250 to 750 range at least on the new highs. So that one continues to be on a negative at the moment.